Hello, everyone. I'm glad you're here. I'm Jason Ball with Jason Tips, and I'm ready to get started for the day. But before we do, I need to show you guys a couple of important disclaimers before I can do anything. Everything shared during this video live beam is for educational information purposes only. I'm not providing any personalized financial, investment, tax, legal, or insurance advice. While I am a CFP, ChFC, CLU, I am not acting as an advisor, fiduciary, or a client in any capacity during this content. No specific recommendations are being made, and any examples shared are for hypothetical and general in nature. If you need tailored financial advice for your situation, please consult a licensed financial professional like a CPA, attorney, insurance consultant, or CFP that is a fiduciary to you. You can always find my full legal disclaimers at jasonfintips.com/legal. All right, with that said, let's hop into today's topic. Okay, hopping into today's topic, I wanted to talk about Content Creators Guide to Planning for Irregular Monthly Expenses. Not only do content creators have a lot of stuff as their small business owners that have to be able to manage their incomes a little separately to have sinking funds for being able to manage for up months and down months. You've also got to manage for irregular expenses that a lot of people that are on a regular W-2 income don't have to. So first of all, why are irregular expenses and why are they important? Well, understanding them is regular expenses are costs that occur on a monthly but don't occur every month but show up regularly over time. So this would be things like software subscription, domain renewals, web hosting, quarterly estimated costs, CPA services, legal services, project-based costs that you're going to need for equipment upgrades, contractors, studio rentals, different things that are coming up. And you also have some seasonal personal costs that might come up for travel, gifts, events, conferences, things that you have to have come out of your budget as a independent content creator. So common irregular expenses for a lot of content creators are Adobe Creative Cloud, Canva Pro, Final Cut Pro, professional services, as we said about tax prep, legal fees, brand consultations. Maybe you need some upgrades on lightings, microphones, a new GPU, new computer, personal, holiday, travel, insurance payments. So what's the difference between an irregular expense and an irregular versus an unexpected expense? Not all bills are created equally. An irregular expense might be something that is predictable but not known when you're going to need it exactly. Known costs like an annual expense, your quarterly taxes might go up or down, but you don't know exactly what that expense is going to be. You might have more domain renewals, but these can be planned for with kind of what's called a sinking fund and forecasting what's going to be there. An unpredictable expense might be something like a broken laptop, urgent dental work, your car has to get fixed, your GP broke down. These are things that you were not expecting to have happen, but now are kind of an emergency. So create two separate saving buffers, one for planned irregulars and another one which is your true emergency fund. The consequences of not planning ahead, last minute, if you don't have it, it's like, okay, I absolutely need to have my car fixed or buy a new GPU. It might have to go on a credit card. You might have to delay project or missed opportunities. It gives you some cash flow instability and it can increase your stress and increase burnout. So what are some ways that we can handle some of this? Well, one of the ways we can is we can take a look at an annual expense breakdown. So here's an example template. So you might say, okay, I know my Adobe Creative Cloud is due dated January 5th, and my annual cost is going to be about $700. How about I save about $55 a month that I put into my monthly savings because I know that I'm going to have that annual cost, but now I'm doing it on a monthly basis. Same thing with tax prep and tax work. I know that I'm going to have about $800 in taxes for total cost due around April, somewhere in there when my TPA gets my work taxes done. And so I'm going to start saving, a little bit of money. I'm going to save, $80 a month that I know that I'm going to have to pay for my annual taxes to get filed that year. Web hosting, it's going to cost you 240, 300, whatever hosting but you're using. You're like, okay, well, I know that's going to cost me about $40 a month. So you're kind of looking at the expenses on how much did it cost you monthly to make sure that you can hit but schedule for your annual payments when you hit though. Let's say you're doing an annual holiday campaign budget. You know that you're going to be spending about $1,200 on that. So you might put $150 a month away, knowing that it's set up for that money and it's got its job to be part of that holiday campaign budget. Mm. You can do things like using Google Sheets or for the regular expenses, revenues versus irregular expenses heat map, kind of take a look and say, okay, let's lay these out all year long and say, okay, which months or the years that I'm going to have some really high, some expected irregular expenses. So January, April, August, November, and January, you might have your expected expense of Adobe. April, you have your tax prep. August, you have your hosting fees. November, you have your campaigns. So you're planning for these expected revenues, but you're also planning for these irregular expenses. So the other thing you could do is you could also do something of a batch or a group forecasting expenses. So you put like, okay, in Q1, I'm going to have my web hosting, my gear upgrades. This is what I kind of plan on doing this on an annual basis or as needed. Q2, I've got my CPA payments, my email marketing tools, might have my software coming due for renewals. Q3, you might have some course enrollments, some design rush. Do I need some new pads, a new iPad pen, things that you're going to be planning into, holiday campaign budget or a brand consultation. So basically what you want to do on something like this is you take that irregular cost and you divide it into a monthly savings goal. For example, if you had a $600 gear upgrade budget, you'd want to put $50 a month into a sub account that you would set away for your annual new upgrade. Example of a sinking fund account, bank statement sample. So we got a gear upgrade at the savings bank, just as an example, would be a monthly contribution of $50 a month with an annual goal of $600 for the upgrade for new gear as needed for new camera lenses. Software subscriptions, you get ready, put $35 a month to your annual goal of $420 for an Adobe or Canva. Tax revenue, tax reserve, you're going to have some quarterly payments. So you start making, okay, I get my check. I'm going to put $150 into my reserve because I know that money has to be able to be available for my quarterly tax payment. So what do you do when you have these irregular, the next thing that's comes is what happens when you have irregular expenses overlap with low income months. And some months might hit harder than others. If big expenses during a slow income period, you might have to tap into your sinking fund, defer or downgrade some non-essential services as needed. And, you might have to delay some of those tier 3 optional expenses for courses, swag, upgrades, vacation, something like that so you don't spend money you don't have. If you need to, you might even be able to negotiate payment plans with vendors or service or go from a lump sum to a monthly payment, and watch for annual discounts or promotions rates to stack some of your best budgets. So sometimes stuff goes on sale and you can grab a software subscription on a discount. That might be a great time to save yourself a little bit of money. So here's kind of a tip, kind of a 3-tier exploring expense. So I think you got your must pays, your strategic, and then your optional. Just kind of gives you an option for kind of laying stuff out. And you can also use some things like some budgets, like you name a buddy, you name a budget, Monarch Money or Tiller, Google Calendars, Notion tables. So just to kind of give you an idea of some of the stuff you can do. In conclusion, you're not on your own out there. There's a lot to do out there. As long as you can kind of have a plan and you can start budget, I think being able to go out and plan and have an idea of when those expenses are going to be coming into you and have a plan and look at it for that, I think that will really help reduce a lot of the stress. So thanks a lot. And thanks for hanging out with us once again, and hope to see you next time.